Tonight, a story is unfolding in the global markets. Silver, a metal often in gold's shadow, is making headlines with a startling price move. The charts show activity we haven't seen in some time, raising important questions. What is happening, and why is it happening now? A sharp upward spike pierced previous resistance, a sudden eruption of buying pressure, marking a dramatic shift in market sentiment. What caused it? We'll explain the three primary drivers behind this silver shock. Remember, silver plays a dual role: an industrial commodity essential for modern technology and a financial safe haven in times of uncertainty. This spike signals one or both roles have sharply come into focus. The first driver is tangible: silver's role as a critical industrial metal. It's essential in everyday electronics, electric cars, and especially solar panels. As nations push for greener energy, manufacturing surges. This increased industrial demand is a primary force pushing silver's price higher. First, industrial demand is surging. While a single solar panel uses little silver, millions of them create powerful demand. The expansion of 5G networks and electric vehicles adds to this fire, as every EV and base station needs silver components. Manufacturers are securing supplies now, pulling future demand into the present and pressuring prices. This suggests growth and innovation, but also creates a potential supply bottleneck. The second major force at play is silver's role as an investment, often seen as a safe haven asset. When investors feel worried about the future, they see storm clouds, inflation, geopolitical instability. They seek refuge in tangible assets, like its more famous cousin. Gold, silver has been a store of value for thousands of years. People buy silver coins, silver bars, financial instruments tied to the silver price, believing it will hold value better than paper currency. This is the fear trade. It can move the price fast. Look at the chart. The sharp ascent in silver matches heightened economic uncertainty. Recent inflation figures came in higher than expected, eroding the purchasing power of the US dollar. When your dollar buys less tomorrow than today, holding silver gets more attractive. Massive flows went into silver-backed ETFs in the days before the spike. Not just small retail investors, large institutional money, big funds hedging against inflation. This demand becomes a self-fulfilling prophecy. More buying pushes the price up, which attracts media attention, which brings a new wave of investors afraid of missing out. The psychological component matters. The chart reflects collective human emotion: fear, greed. The move was amplified as news of the jump spread through financial news networks and social media platforms. Also, consider interest rates. When central banks keep rates low, the opportunity cost of holding non-yielding silver is low. You aren't losing much interest by holding metal instead of cash. Whispers that central banks may be slower to raise rates bolster silver's appeal. The third and final piece of this puzzle is supply. You can talk about demand all day, but the price is ultimately set where demand meets the available supply. Silver has to be dug out of the ground, and that process is neither quick nor easy. A significant portion of the world's silver is a byproduct of other metal mining. Zinc, lead, copper. This ties silver supply to the economics of those base metals. If the price of zinc falls, a mine might reduce operations, reducing byproduct silver to market. Recent events have strained the supply side. Production slowdowns have been reported at major mines in Mexico, Peru. The slowdowns stem from multiple factors, including rising energy costs for miners, stricter environmental regulations, localized labor disputes. Disruptions can hit any part of the supply chain, tightening physical supply just as industrial and investor demand picks up. Above-ground stockpiles have been drawn down over the past few years. The vault surpluses that once buffered disruptions are gone. The cushion is gone. Any supply shock is felt almost immediately in the price. So, what signals should we watch? Don't get lost in the day-to-day noise. Focus on the trend. Look for higher highs and higher lows. This pattern suggests the upward trend is strong. Also, watch the volume. A price move on high trading volume shows strong conviction. The recent spike occurred on record volume, validating its strength. Also, watch related markets. A rising gold price combined with a falling dollar is a powerful combination that often precedes a major silver rally. The one clear takeaway is this: silver's recent price move is the result of a powerful collision between surging industrial and investment demand and a tightening global supply. The key signal to watch from here is the relationship between price and volume. That is the signal to watch. Price with volume tells the next chapter. Ignore noise. Track conviction behind every move. Rising price with rising volume. Strength. Falling price on heavy volume. Weakness. Stay patient. Read the tape, not the chatter. We'll be watching with you.